Hello, everyone. Thank you for coming out to our Lunch and Learn today. If any of you are here only for the lunch and didn't know what the learn was about, we're going to talk about the key 3 things that sets Flipco apart, how we use speed, relationships, and common sense to approach all of our deals. All right, so this is the topics that we're going to work through today, but really, especially with the size of the group that we have, I thank everybody who showed up, especially a week out from Christmas, to do this with us today. But I really want this to be interactive. That's one of my favorite things about a smaller group size is people being able to speak up, ask questions, challenge me along the way if there's something that I mention that doesn't sit right with you. And really, before we even get into that, I do want to acknowledge 2 elephants in the room. So one, I am the most biased person to do this presentation. I've been with Flipco one of the longest out of the entire group, and obviously I'm very passionate about what sets us apart in the market. And also for any of our listeners who are going to be watching this in the middle of July, remember it is December 16th, and that is why I'm dressed in red velour for today. So I'm Kayla Pelland. I am originally from Canada. That is where my real estate journey started. I've been investing since I was about 20 years old there, mostly in value add, property acquisitions, rehabs, property management, and small business acquisitions and startups. I moved to Texas, and I'm happy to call Houston my home now, in 2019, and started with Flipco in 2021, shortly after the company was started. I am super passionate still today about helping people get started in their real estate career. Even early this morning, I had somebody that I started talking to on Facebook, and their text message they sent me right away was, "Hey, I'm only 19 and I'm looking to get into real estate. I know that's what my career is going to be." Loved that. Fired up my morning. I was very excited about it. So in order to understand what sets us apart, I think it's important that everybody understands where Flipco started. We really were started on the back of a napkin in Las Vegas. And so our founder met somebody and was introduced to them that worked in the hard money space and started asking questions about, hey, what do you do? And quickly this became a math equation for our family office. We all office here in this lovely building. And it was just an idea of, hey, what can we do to disrupt this space? All of the questions they asked on day one was, what problems do we need to solve for in this space to differentiate us and to actually provide a product that solves problems? Since then, we've gone to originate close to 500 million loans across over 2,000 separate properties. And our team still is today predominantly in-house. A lot of the members that you see here today are in office every day, and you'll have a chance to network with them after our presentation. These are our 5 core values. And it's interesting that we make a point of including this on any of our presentations because it's important for you all to understand when I talk about the key reasons why we're different, why do we believe in speed? Why do we believe in transparency and relationship building? It's because of these 5 core values that we very intentionally implemented. I was recently asked on a call if I felt any of those core values were negotiable. And it was an interesting question. It was kind of framed to me as, hey, if it made a difference from a monetary perspective, would you compromise on any of those? And I stopped and thought about it for a second, and I finally said, no, you know what, we wouldn't. We've put these core values into place really intentionally, not only for our investors, but our partners, our brokers, as well as our employees. And at the end of the day, because of that, we are who we are, and we can be this vehicle for success. This is Flipco's vision. And what's left off of this slide is that we really believe in that vehicle for success, not only for our investors, but also for our employees as well. So we're able to provide them an opportunity to grow the same way through these differentiating factors. You'll see that we've been able to provide that same vehicle for success for each of our investors. So the industry problems. I told you already, how did Flipco get started? What was the main question? What can we disrupt in this industry? What do we need to solve for? Some of these factors are instances that I'm sure many of you have encountered. So how many people in this room have used hard money before? Okay, so leave your hands up for a second. Carla, put your hand back up. I saw it the first time. No cheating. If you take a look at these, what do we have? 7 industry problems, and let's be honest, these are just the top ones. How many of you have experienced at least one of these, if not more? I doubt any of you can really put your hand down on that, right? And so working with Flipco, we look to try to alleviate a lot of that. My favorite core value that's from that list of 5 is by investor for investor. I would say more than anything, we approach our decisions with that core value in mind. And that's why we knew to say, hey, time delays, what does that cause for a problem? Has anybody lost out on a contract because of time delays? Has anybody lost earnest money because of time delays? As investors ourselves, we've experienced that. That's something that we just cannot have happen. We consider deadlines seriously in this space. And so the next slide is going to walk through how we have addressed these issues. So specifically, less than perfect credit. So this is an issue that we see in this space often. We don't have credit checks with Flipco. We're not verifying your income, whether you're a W-2 or a 1099 employee. So we're not pulling tax your tax reports or anything like that. So no income verification. We're also very cognizant of your liquidity. And so this is something where as a lender, and I'll describe to you shortly what type of lender we are and why that matters, we care about your liquidity. You're going to hear me say it time and time again, your success is our success. So if we're just charging you fees for fee's sake up front, that's going to hinder your ability to perform down the road, and that's not going to work in our favor either. We're also very first-time investor friendly. Again, you saw how excited I was to get a phone call from a 19-year-old wanting to get in the space. Clearly, she would be a first-time investor. We will not only work with first-time investors, but we partner with you in that and hold your hand through that process. That may look like not funding your deal sometimes. So there can be a conversation of, Jacob, love that you're excited about this. You finally got a property under contract. I want to tell you what our underwriting team is seeing. Look at these comps. Look at these new builds that are going to be coming up. Did you notice that one street away is a landfill? I know you're looking at this in November. It doesn't stink yet. It's going to, right? So that may be us being cognizant of the fact, hey, you're newer. You may not know these things. You may not have seen them. Tight closing timelines. Again, we talked about how deadlines are so important. One of the three factors we're going to dig into today is timeliness and speed. And so having an outside-of-the-box opportunity means as a true balance sheet lender, we're underwriting to our own guidelines. We're only checking our boxes. So the alternative to balance sheeting is selling that paper, meaning that even if a deal makes sense to us, right? What's your name? Charla? Chara. So if Chara brings me a deal and I'm looking at it going, you know what, this is creative, it's a little bit wonky, but I know that you know that neighborhood and I know that you have a contractor that's worked on similar projects and you may be a new investor, but you come from a long history of GC family members. So I know you know how to change a toilet and run some blue tape through a property, right? If we were having to sell that paper, I would have to say no to you probably because they're going to say, no, Chara's new. She's not going to do a 50K or a 60K rehab where she has foundation work to do. But we can look at that and say, no, this makes sense, this deal. We're going to take a bet on this property and we're going to take a bet on this investor. So relationship-based lending looks just like what I described, right? So if Chara was filling out an application online, she would be checking boxes, typing some answers in. Everything would likely be automated to some degree. She's got an automated underwriting system that's just going to run an algorithm and say, no, needs foundation work, new investor, and we don't like that zip code. We can't lend there. Relationship lending is just like people, I mean, these are real team members in this photo, Stephanie, shout out, who's going and visiting her investor. She's getting to know the project. She's getting to know her investors. We understand your background. There's not going to be somewhere on an application to say, well, all three of my uncles have been GCs and I grew up on a work site. Like that's not, there's no algorithm that's going to run that. And so when you're working with people and partners with Flipco, they're going to take all of that into consideration the same way that we might, talk you out of doing a deal because we also care about how you're going to be able to perform. And, when I was going through this and preparing, a conversation I had with Alessandra, one of our senior directors this week, really hit home. And she said at a recent conference, there was more and more talk about how important the servicing of a loan is compared to just the origination. So everyone is so worried on day one. What's your rate? What are your terms, Dobson, right? But what they're not asking about is how quickly can you fund my draws? What happens if I need to make a change on my rehab budget? If this property sits on the market for 4 or 5 months, what does that look like? How do you help me work through this? What resources or introductions can you make in, Atlanta, Georgia to help me through this project? Again, Flipco is going to take that relationship perspective and work with you from start to finish through your project to get you through that. This is a quick walkthrough of what that looks like. The real takeaway here is understanding that for every single one of these circles, there's somebody alive, in this room, in the flesh, who's actually working with you through it. So your introduction is going to be your account managers. So they're going to make sure that you're getting a quote, getting your deal process. So account managers in the room, put your hand up. Perfect. They're going to be the ones that are getting you from, hey, I found a property, all the way to that funding spot. Processors are going to be working with you. They're all upstairs processing deals right now. We're going to work with the title company through your funding. And then as soon as you hit draws, where's my draw girl at? Miss Araya. She's going to onboard you and make sure that you know how to pull your draws. She's going to work through how to do self-inspections. That's going to tie into the speed as well when we get there. And then when you come to that refinance or sell, you can reach back out to your account manager if you're looking to hold that property, list that property. You can ask, hey, this is what I'm seeing for comps. Is that what you all saw the first time as well? And we're happy to give you advice. And the real key to this process is this last one right here. This is where investors make money. When we repeat this process, you have scalability, right? You're able to actually build generational wealth through real estate when you can repeat this. No one ever got rich off just doing one flip. So if you're only going to do one, that's a hobby. We're happy to help you through a hobby. But really, we'd love for you to come back. But this is why it matters to us. Because if you fail on those first 4 steps, you're not going to do this again. And then that just leaves our team on a hamster wheel, constantly having to find new borrowers, new investors, and new brokers. So when we're talking about speed, right, what does that actually look like, and why is that important? So we spoke again, or already rather, about failure to speed can cost deals, but it can also cost money during your project. So even if we were really quick to close, what happens if we're super slow to service? Well, when you have GCs out on the site, has anybody in here flipped a house where they've had to pay GCs? All right, Dobson. So you're paying your GCs. How important is liquidity when you're working through your project? Very important, right? And so if you're working with a lender who doesn't understand the importance of that, they're going to have you waiting a week, 2 weeks to get inspections done for your draws. That right there, even during the servicing part, is paramount, because that could mean that your project takes a month or 2 longer if it's stalling you every step of the way. The other piece of this on the front end that is really important is how much negotiating power you have when it comes to purchasing your property. So Carla works as a realtor as well. So if you have offers in front of you, especially on a distressed asset, the majority of our deals is either a distressed seller or a distressed asset. So if Carla's negotiating as a realtor on one of these deals, she may encourage her borrower, or her seller rather, to say, hey, if this borrower can close in 5 days, I get that they're $5,000 less, but this is a cash offer. You're going to have money in hand before Christmas. I mean, that's going to speak volumes, right? And so we've had borrowers that I know have won at the negotiating table because of our ability to perform as their closing party. And then also being able to actually get the deal across the finish line. It's no good saying you can close in 5 days and then you fail to actually close. We've saved those borrowers. I mean, we have closed on the same day of getting a file. Please don't do that to us. It's not fun. But I've had people call me on their way to a title company saying, oh my gosh, Miss Kayla, I'm supposed to be closing with XYZ. Told you not to do that, but they tried. And here we are, right? That for some reason, they're getting retraded. They don't have the money. The guy who has to sign the check at the other company's on a yacht somewhere. And now they're calling us scrambling to get that deal closed because they're going to lose their earnest money or the deal. Sometimes losing $5K in earnest money sucks. Losing all the potential profit on a property that you've underwritten and worked on for a month, that's even worse. And so this stage here really digs into that front end piece. Again, I'm encouraging you to be critical when you're looking at your lenders. Do not just focus on the front end process. Always think critically about what goes on for the servicing. But as newer investors, this is what you're going to want to understand about the stages that you're going to go through. So, and really we could do a lunch and learn on each one of these stages. So I'm going to rip through it quick. First thing you're going to be doing is looking for your preliminary review or submit a quote. This instant. All of you can go on our website. I encourage you to do it today. Go to the Flipco website, request a quote. Have it be a make-believe property. It does not have to, it doesn't bother us any. Test it out, see what it looks like so you're ready when you do have a real property. You're going to put in your address, purchase price, rehab estimate, and what you're calling your ARV or after repair value. You're going to get an instant quote. Those terms, and this is one of the things that I'm very proud of, you're going to see, right now you'll see 2 and 12% interest. Do you know why I know that's what you're going to see? Because it doesn't matter if you're an experienced investor, a new investor, buying a triplex, it does not matter. our rates and terms are going to be the same. They're not going to change based on your credit score or your history. And so we're really proud of that. What will change on there is depending on your valuation, your leverage may change. That quote's going to spit out at 10% down. As long as we agree with your valuations of your own property, that's going to stay consistent. Through that, you're going to move into our preliminary review or approval. So that's a quick phone call. Stephanie's going to call you. Hey, Chara, tell me a little bit about your property. This looks okay. Yeah, tell me why you like it. What experience do you have? Tell me about the property. What's the backstory here? During that conversation, it may look like, hey, you back up onto train tracks and you have a 4-way stop in front of your house. This is going to be a hard resale. That happens. Don't laugh. It's true. But on the flip side, it could be, wow, it looks like you really found a gem. Love that you know that neighborhood so well. Let me get you set up so that we can go to underwriting. In our underwriting stage, you're going to provide 5 things. Your accepted contract, photos of the property, a rehab budget or scope of work, your proof of funds, loan application. Thank you, Jacob. It was a trick question. I knew. I was like, remember there's 5. There's always 5. And the cool part about that is that that's going to push your file to our in-house underwriting team. Notice how I did not say that's a third party. Don't walk out. This is your cue, sir. No, I'm just teasing. So Mike leads our underwriting department, and that's something that keeps speed top of mind, right? And so if you've ever had to get an appraisal done on a property, you're waiting, you're spending money, and you really have very few steps of recourse if you disagree with what that says. So if Mike and his team come back and say, hey, this is what I'm seeing, we're going to share that feedback. Hey, Jacob, on this deal, I know you're really excited about it, but what I failed to notice, and you may have as well, is that there's new builds going up around the block, and soon as your house goes on the market, those will too. Did you think of that? That's going to dilute the value of your property. Oh, wow, didn't think of that, right? And so we can have those conversations. Or it may be, hey, that team's looking at something very black and white and they see a value, and I can go back and say, what do you think of this? And it's, no, I thought that too, but hear me out. And we can have that dialogue. And that happens all in-house, quick, speed. We also, again, you're seeing the people in here, right, that all work in person. They are able to walk over to that team. They can shout over to their processor, hey, I got the driver's license. I'm sending it to you right now. Hey, sit tight. I've got a CMA heading over to you to the underwriting department. That creates speed. A lot of other organizations, they're showing up and they're having to, they're on separate floors. They don't know each other. We work together every day, day in and day out to get your deals funded. Then we're going to take a look at your liquidity. This is how we qualify you as a borrower. So we're going to take a look at your proof of funds. It's just one bank statement. We want to make sure you have funds to adequately close, carry, and get your rehab started. Again, your success is our success in this. You're going to get your final loan approval at that stage. So the only other things we're really collecting are LLC docs in your driver's license or ID, and then you're going to be funded. We can work through this whole process within 72 hours. As quickly as you're moving, we'll continue to move your file along. And then really the only other thing here that if I haven't driven it home enough, is really the communication factor and knowing who the key players are. You're going to have an account manager who is your point of reference for your entire process up front and then through servicing if you ever need anything. But then from there, again, they're going to be your best advocate. If there's a question that you have, concerns, or you need somebody to really support you further through that origination process, they're going to be your teammate through this whole process. And then finally, common sense lending. It makes sense to point this one out last because everything I've talked about, I think, leads to it. And so what does a common sense lender mean? This is somebody who is going to look at the operator and the asset and make a common sense judgment call based on that. That's backed by statistics and data, again, because we want you to be successful, but we are not just checking boxes. That's the biggest difference between looking at things from a common sense perspective, which sometimes can work in your favor. Hey, you know GCs, you've got this down pat, you know what you're doing. Mr. Jacob, these new builds, they're going to wipe you out, right? Common sense lending can sometimes mean not lending on the project and hopefully saving somebody from making the wrong call, but it could also mean giving somebody a shot, being that vehicle to success for a new investor or somebody that needed a lender who's a little bit outside the box thinking to get a deal through to the finish line. That's our 5-year anniversary. And finally, if none of this has really spoken to you just yet, we have the data to back up what 5 years of this really looks like. So we've funded over 2,000 loans to date. wire sent, rehab draws. These are all instances of us reinforcing being able to keep our borrowers engaged and moving through our project. The one thing on here that I would say, in reviewing this that I almost disagreed with is putting something like a definitive number, 2,200 plus loans funded. To me, that's a much smaller number than the impact of what Flipco has made. So that's houses that we have helped rehabilitate. Again, these are distressed assets and distressed sellers. That means that there's also 2,200 plus people who we've hopefully provided a solution for who's had to sell their asset. That's over 2,000 houses that Flipco's helped put back into communities, revitalizing neighborhoods. That's extra jobs for realtors, title companies, contractors, that because of Flipco's ability to fund a project and the investors' engagement in wanting to flip these houses, that we've created additional jobs in over 24 states that we're working in as well. And that's something that we're really proud of here. We're excited to be able to work with newer investors like those that are joining us today, anybody who's listening online as well who would like to engage with us. Hopefully you're never going to be just a number to us, but you would be another number up on the wall for us as well. And with that, I know I said we could be interactive during this, but were there any other questions that anyone has?
Your criteria is what? Up to 90% of purchase and 100% of rehab to 70-75 days?
Oh my gosh, this table's on wheels, I'm so sorry. Yes, so we'll fund 90% of your purchase plus rehab up front, and then during the term of your loan, we'll reimburse your full rehab amount. Now, I do say reimburse as well, so the expectation is that the borrower is going in and paying their contractor's material as work is being complete, and then they're able to submit draws that will reimburse. We do those fundings twice a week on Tuesdays and Fridays. It's usually about a 72-hour turnaround time. So if you're paying your contractors on a Friday, you submit that draw request, you're going to get paid next week on that. So the money will churn really quickly that way. But all reimbursed.
Do you guys send an inspector out, or we send pictures?
No, so all of our investors are able to do self-inspection through a company called Company Cam. So we pay for you to have access to their portal. It's an app you put on your phone. You go to the property, you're taking photos and videos, and then providing us receipts to show payment. And that keeps it quick as well, and there's no cost. So when we're talking about not wanting to fee everybody to death on the front end, we also don't do that during your loan. So you're not paying anything extra for your draws. Any other questions?
Zoraya, what are some of the common questions you get on onboarding?
I mean, that was one. The fees is a big one. Like, are there any fees to service the draws? Obviously, we don't have any fees for that. What photos should people be taking? Is like whatever work that's being done needs to be recorded in Company Cam, because we really do rely on you to inspect the properties. We don't send out any inspectors. I think those are like the two biggest ones I do see.
Can you have your GC submit your self-inspections in Company Cam, or do you have to do it as a borrower?
So it's up to you. So we have a lot of clients who have their GC access their Company Cam account. The GC is the one that records the video for them. The client submits the request. That way they're at least knowing what's going on. That's what I really recommend, is the client submits the request, the GC takes the video. You're always seeing what's going on. We have some clients who really trust their GCs, so the GC will submit the draw request and take the videos for the clients.
Yes, Matthew.
If you had to give advice to a first-time investor looking back from what you know now, from your first flips, what advice would you give to a first-time flipper?
I would say very overarching advice is networking. So the markets that I started my real estate journey in did not have nearly networking opportunities really. And as we've moved from state to state, what we found, especially Matt works on the biz development side, so you've seen this. Houston has so much opportunity for networking events and meeting people in the space. Like, you can go and do something every single week to get yourself into circles where people are already doing what you're doing. And I think as a newer investor, that is critical. Just really surrounding yourself with like-minded people and people who are in the space and they're honestly happy to help you. So if you're showing up and you're putting yourself out there, introduce yourself and tell them, hey, I'm Kayla, I'm a newer investor to this space. What brings you attention? Oh, Carly, you're a realtor? Awesome, do you work with investors? Bang, now I have somebody who understands what an investor needs with comps. How do I calculate an ARV? And being able to really leverage that circle as you grow is critical as an investor. More specifically, don't buy properties that back up on a commercial. Still on that one. Don't do it. Whoops. Any other questions?
What would you say? Some
Do you guys do just residential properties or commercial as well?
That is a great question. So Flipco can do residential as well as commercial. For commercial, it's usually smaller commercial or mixed use. We do have a sister company called Bridgeco Financial that is very similar to Flipco, and they'll do full commercial. What were you going to ask?
So what would you expect? What do you see as far as like common overlooks or mistakes that newer investors make when they're trying to source deals?
I mean, I would say the biggest mistake that they're making on the sourcing side is not understanding how to underwrite their own property. So everybody who's here today, you've signed up. Hopefully I'm sure we can send you our underwriting guidelines. If you're not used to comping your own properties or finding comparables, that's really where the biggest risk lies, especially if you don't have a lender who's going to be critical about your valuations, right? And so if and we see it, first-time investor will come to us and they're saying, this property's going to be $450,000. We go, okay, great. So where did you get those numbers? The wholesaler told me. I bet your wholesaler told you that. No shade to wholesalers. But you have to remember, y'all have all heard me say this in the office, is when you're receiving advice through the course of an origination or just your real estate journey, ask if that person has anything to lose by providing you that advice. A wholesaler has everything to gain by having you buy the property at the price they put it at. Many times a realtor's in that same boat. Your contractor can be giving you a scope of work today that they know they're gonna have to give you 15 change orders for tomorrow. But you're in it already, what are you gonna do, right? And so you have to ask yourself, just think critically, right? Not that everybody's out to get you, but there could be people that maybe don't know and you're believing them or taking their word at face value, but you should learn how to think of things critically. Does my valuation make sense? Do those comps make sense? Don't fall in love with the property. Look to the data to make sure it's sound. Does the scope of work make sense? Have they addressed everything that I'm seeing? I see cracks in the drywall and my foundation and floor are crooked. You don't have anything for foundation on your scope of work. Like, ask those questions. Don't assume that they're the experts.
Just your loan term, 6 months or 12 months?
6 months. Yeah, we have 6 months terms out the gate with 3-month extension options. We are seeing that often with the market right now. Deals are going over that first 6-month hump, so we have measures in place to help you through that.
For first-time investors, how great is it do you think them just look at it on Zillow than to actually go and walk the property themselves?
Don't buy a house just off Zillow, please. But I know you're asking because people say this. I think part of understanding your comps is knowing how to look at something. Redfin or Zillow as a quick gauge of, hey, do I even bother to go walk said property? But unless you have intimate knowledge of a market, of those properties, you've been flipping in that zip code for however long, you should not be buying properties sight unseen. You should also be bringing somebody with you that you now know and trust in the industry, hopefully that you met at a networking event, to walk those properties with you. Oftentimes when you're going to purchase, if it's a wholesale property, or even the listing properties are very competitive still. So if you go and walk that once, that's often the only shot you have before you make an offer. So if you want to have a contractor with you or a seasoned investor with you, that would be the time to bring them along. Anything else? Those are all good questions. This is more fun. We'll just do Q&A next time. Anything? All right, awesome. Thank you. There's still lots of food if anybody wants anything. So please.
Thank you.